I mean, even as a nurse, I got into my first job. It was like, okay, here's Fidelity. You're going to be signing up in this index fund. These are the mutual funds you can sign up for. And all my money and investment retirement money was going towards the Fidelity. And that was really the only option I knew. And then as I started learning about real estate and how easy it is for everyone to get involved in it, and then now I'm sharing that with other medical professionals that I work with, it's been an awesome way to kind of get people that we know and love involved in what we're doing and show them different strategies out there. So that was huge for us.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik. With me, as always, is John Cohen. How are we doing, bud?
We're doing good. We have about 2 feet of snow, and it was and we're supposed to get more, although it's not snowing right now, but it was a good way to get back from a weekend away to a blizzard. That was no fun, but today, hopefully at some point, I'll get outside with the baby and, I'm going to just drop her in the snow and she'll disappear. But no, we'll hopefully we'll have a good time later.
She's your measuring stick now. You can see how deep it is.
Exactly. She'll be 2 at the end of the month. So she's right around, that height that I'll have a good barometer of how much snow we got.
Jesus Christ. I can't believe she's going to be 2 already.
Crazy.
Yeah, no, it's wild. Luckily, Florida, no snow, but it is cold. It got down to like 30 overnight. It's like 40 now. So my sister's blaming me for bringing the cold down with me coming from New York, but it's really not terrible. I walked out. I had, sweatshirt on. I put on my big jacket expecting it to be freezing. And I walked in. I was like, yeah, this isn't so bad. So yeah, I'm sure no one agrees with me here, but.
No, that beats it. We were upstate and it was like minus 12. Mm-hmm. Yeah, but it was actually pretty cool because when we got there, the lake really wasn't 100% frozen. It's a big lake. Mm-hmm. And when we got there at night, we got there like 6:00 Friday night and you looked outside and you saw the water. And the next morning it was frozen. I was like, wow. So that was pretty cool, but it was extremely cold. But hey, it is what it is, right?
Awesome. No, that is pretty cool. But let's jump into today's episode. We got a really great guest on today. Excited to hear her story, learn from her, glean some insights, and hopefully share some awesome stuff with everybody listening. So that being said, Savannah, thank you so much for joining us.
Hi. Yeah. Thank you. I'm super stoked to be here.
Yeah. Awesome. So why don't you kick us off? Just tell everybody a little about you, where you're from, kind of your background story and what you're doing, all that good stuff.
Yeah. I'm from Northern California. I grew up in Sacramento, California. I went to Sacramento State University and got my nursing degree, worked in a couple of different specialties in hospitals up in Northern California, and then went back to school to get my master's degree in nursing leadership and administration. And then moved down to Los Angeles, California, where I live now. I oversee multiple departments in a hospital down here in LA. I have 2 young daughters, a 3-year-old and a 1-year-old. And when I was on maternity leave with my second daughter, my husband and I were looking into different ways to start investing our money, grow our wealth, different retirement strategies. And we stumbled upon real estate, dove deep into real estate, started listening to all sorts of podcasts, reading books, learning different techniques and strategies to generate wealth within real estate, and started off with single family homes. And then shortly after switched over multifamily. And right now we're doing multifamily value add syndications.
Awesome. I love it. So, if I got the timelines right, you said your second kid is 1. So you guys have moved pretty quickly from when they were born to today. I don't know if they're like 1.5 or almost 2, but less than 2 years, right? That's a pretty quick transition. Why did you move so quickly from single family to multifamily?
We wanted to scale our business. At first, we were looking into real estate to kind of invest passively. And then when we learned how we could really use it to generate wealth and create this time freedom for ourselves, put ourselves in a position 5-10 years down the road where we could really just have a lot of different passive income streams through real estate. We were looking for ways to do that. And when we were looking to a lot of the people out there doing it, a lot of them said that the way they scaled was through multifamily. And then as we started researching multifamily and kind of what that entailed, less risk, higher rewards, different ways that you could structure the deal, we realized this was something we could create a business in and kind of roll with.
Mm-hmm. I love that. And when you started looking at multifamily, what led you to going the syndication route? Because I think a lot of people look at it and say, okay, if I want to do this myself or quasi passively, let me just go from 1 unit to 4 units or 1 to 10. Why did you scale up into what I'm assuming is probably much larger than 10 unit properties?
Yes. Syndications really allow anyone in multifamily the ability to scale if they tap out of their capital or income stream, that they're able to leverage other people's money to continue to do deals. Also, we realized as we started getting into the multifamily space and in real estate in general, and a lot of our friends and family were very interested in it. And they were interested in real estate investing, didn't necessarily want to do a lot of the heavy lifting, really wanted to reap the rewards that real estate investing has to offer. But didn't necessarily know where to start. And as we started exploring syndications and multifamily, we were like, this is a way that we can get a lot of other people involved, our friends and family involved, people who want to invest passively in deals. This is how we can get them involved in real estate and at the same time grow our business. So it was sort of a win-win from that respect.
That makes a lot of sense. I know over the years as I made the transition, and then even very recently as I left to go off on my own, without even asking or saying a word, the amount of people that have reached out to me and been like, hey, what are you doing? What are you working on? Is there anything I can get involved with? Has been actually very surprising very recently, because I thought it would take a little bit of me like, hey, if you're interested, let me know type thing. But I've had dozens of people just kind of reach out and just be like, what are you working on? What are you doing? What are your plans? What are your goals, et cetera? Because I haven't really talked about it much. And after those conversations, a lot of them have said, hey, if you come across something, let me know, let's talk. And obviously that's a loose thing, right? That's not somebody committing $1 million to a deal, obviously, but knowing those people, knowing that they've done it before, it's not like they're a random person off the street. So it's been really surprising to me to see that happen over the last 3 months, give or take.
Yeah, it's awesome. I think a lot of people too, they don't even realize what a real estate syndication is. I think when people think they want to get started in real estate investing, they think, okay, I need to buy a single family home. I need to get a tenant who's paying down my mortgage. I need to either manage it myself or hire a property management company. And it sounds like so much work. And it really, when you're coming in on the outside and looking at real estate, you think there's like this one path that you need to be on to reap the benefits of real estate. And when you start learning about real estate syndications, or as we start educating people on it, it's like, wow, they can take a really passive approach to invest. I mean, they're really handing over their money to an operator or syndicator that they has either a good track record or they like the deal. They vet out the relationship and they're investing that money and still getting great returns, but just with a lot less risk in counting on that one house to produce for you.
Mm-hmm. Yeah, I think that ability to scale up is something that a lot of people struggle to really understand. I know when I've been doing it for almost 5 years now, basically, and I still have to explain it to some of my family members so they really understand how it works. Some of them just understand that we buy apartments and we do it out of state because it's cheaper, and there's obviously a lot more that goes into it than that. But yeah, I think the idea of it and how it works isn't something that's broadly known or widely available. It's definitely not, taught in school systems, because money or investing in general isn't taught in school systems. And even when you go into, colleges, and if you went for business, it's very rare that a real estate course or a real estate finance course is something that's being taught in the general curriculum. So, even coming out of Hofstra University with a, general business degree, not that I was specialized in anything, I don't think real estate was anything that was covered, because it wasn't something I knew about coming into it or something that I was actively looking for. I had to learn it through basically luck and chance.
Yes, exactly. And I think that's another thing that sticks out to people when people hear that you're doing it. They think, oh, if so-and-so can do it, then what am I missing? Or can I jump in and get started on it? So then it kind of just opens up the resources and opportunities to other people who didn't even think that they could get into it because they don't have the background, like you're saying, or the education or the knowledge of it. And they're still able to jump into deals and own real estate. So it's a pretty awesome tool, syndications.
Mm-hmm. So I think what you're talking about is probably something that a lot of people think about and keeps them from going into doing multifamily in general or syndications or raising money. How are you able to bridge the gap from maybe doing a couple single families or even one to then, going into these larger scale multifamily syndications, raising money from other people, doing all these things?
Yes. So education and leveraging other people's experience has been huge for us. My husband and I joined a mentorship program. After doing a lot of research, we just realized that this was something that, especially if we were going down the syndication route, handling hundreds of thousands of other people's money, and then also dealing with the legalities of what it takes to form an entity and that sort of stuff. We really wanted to have a mentor over our shoulder, looking at what we were doing, kind of providing feedback, overseeing our underwriting, making sure what we were doing was sound. It's real estate. It has a lot of similarities to taking down single family homes in that respect, but there are a lot of different components that are different in syndication. So mainly the raising money and then the legal part of things. Also at this point, you have investors counting on you for a return. So it's not just yourself investing in a deal, hoping it goes to plan. You have other people with, counting on projected returns that you're giving them in the pro forma and the deal package. So that sort of thing. And we leveraged a mentorship program to really give us the confidence to take that first step. I know a lot of people who try and jump into it, doing it on their own, they look at deal after deal after deal and don't take any action. And I think a big component of that is not having the confidence to do that. And we felt with a mentorship program, it was worth it to enroll in something like that to give us the motivation and confidence to make that first step.
Mm-hmm. Yeah, I think it makes a ton of sense. I know, back when we were first getting started, it was me and my mom, my cousin, and met John and his partner, Don. It was very similar for me. It was, I could continue to try to figure it out on my own or go over and work for Toro. I just figured going and getting an actual job, one, solved the problem of I hated my job at the time, so it was going to be good. And two, it was going to be like that mentorship on steroids type thing where I can just be, immersed in, the culture, in the business, in the environment, and really understand it. And probably the best decision I've ever made because it, led me to the ability to feel ultra confident in looking at deals, doing deals on my own, bringing in family, significant capital, talking to equity partners. And that's not something that I take lightly. And I was not confident doing, back in the day. So I think surrounding yourself with those people, however you do it, is hugely helpful and something that I think a lot of people do, but I think sometimes people undervalue as well.
Yeah, it could definitely be very intimidating. I know going into a new space, you sort of have an imposter syndrome where you feel like, oh, I don't deserve a space in this place, or how do I fit in, or I don't have the experience, or how are they, people going to welcome me into the real estate community? And since I've been in it and started networking with people, it's such an amazing community to be a part of. There's so many people with the entrepreneur mindset. They just want to raise people up. There's so much teamwork involved on the investor side of things. People are very open and willing to share their knowledge and their experience and past hardships with you. So, if you're nervous about that or kind of weary, if you dive into a really good mastermind or a networking group, you can really build that solid foundation of support that you most likely don't have in your day-to-day life, either working a full-time job or your close friends and family. If you don't know people investing in real estate, it can be hard to create that network. But now with social media and Facebook groups and that sort of thing, it's really easy to start meeting these people. And like you mentioned, people are willing to share their knowledge with you, and leveraging other people's experience is huge in the business.
Mm-hmm. No, I agree. I do want to talk about one thing that you're doing that I think is very interesting and want to get your feedback is, as you've looked to raise money and scale, you've really niched down on who your target investor is. Can you just talk a little bit about that and the decision behind that?
Yes. When we did our first syndication and started educating investors on what a syndication was, we realized that there was a huge gap in between what people thought of real estate and what we were actually doing in a syndication. And as we were trying to educate our investors on what we were actually doing, the steps of a syndication, what their returns looked like, we realized that we were constantly referring people out to other people's educational resources. So we were referring them, to other people out there doing it. So after we did that first deal, we decided to build a brand. So I launched the Net Worth Nurse, and this brand has allowed me a platform to kind of build all these educational resources. So now I have YouTube videos explaining what a syndication is. I have blog posts. We created a doodle video, which literally sketches out what it looks like as a passive investor comes into one of our deals, the exact steps they take, what we're looking for in a deal. It's all kind of drawn out for them, literally. And so now when we have people who are interested in investing in our deals, we can refer them to this website that I created. And it has pretty much all this solid foundation of what they need to know going into a syndication. And then it kind of gets them to the starting point so that when we get a deal, we present them the deal, and they're really just looking at the numbers and the specifics of that deal. They're not trying to bridge that gap of trying to understand what a syndication is. So that was huge for us. And that was a big learning curve after doing that first deal. There was a lot of hand holding and a back and forth with our investors, a lot of time spent in that educating piece. So that's when I launched the brand. And then really as a nurse, I'm working alongside medical professionals. And I realized as I started talking to them about what I was doing, just naturally, because I'm super stoked off it, and just kind of real estate gets brought up in every conversation. And they're always so blown away when they hear that I'm doing it, and they're very interested. And I think people are just naturally super interested in real estate. We all played Monopoly growing up, so there's that aspect of things. And I always get lots of questions like, how are you doing it? What kind of deals? Like, can I get in on it? That sort of thing. And I realized that nurses and medical professionals were here working nonstop in a hospital or clinic setting with patients, and we don't have a lot of time to investigate or learn about these investment strategies out there. And I realized that it's a huge disadvantage to people because, even as a nurse, I got into my first job. It was like, okay, here's Fidelity. You're going to be signing up in this index fund. These are the mutual funds you can sign up for. And all my money and investment retirement money was going towards the Fidelity. And that was really the only option I knew. And then as I started learning about real estate and how easy it is for everyone to get involved in it, and then now I'm sharing that with other medical professionals that I work with, it's been an awesome way to kind of get people that we know and love involved in what we're doing and show them different strategies out there. So that was huge for us. And in terms of niching down to the medical community, I didn't really, everyone's welcome to invest in our deals, but that's kind of our audience in terms of like, those are my people. Those are who I deal with every day. I feel like there's a really huge need for it. So I've sort of tried to niche down enough to kind of get some good momentum, but keep it open. To working medical professionals, I think everyone can kind of relate to that work schedule of working full time and not having the time and energy to research other investment opportunities.
Mm-hmm. I think it's incredibly smart. I encourage people as they start raising money to think of an avatar for their investor. And it's not always the easiest thing to do, but I think it's especially easy from people that transition from a certain field of work into real estate. Like I have a buddy who works in technology and IT. And I said, you should literally be tripling, quadrupling down on your technology experience and your real estate experience, because very similar to what you just said, there are plenty of people who do very well for themselves in that field, and some that do tremendously well for themselves that just don't have the time, but it's something that they're interested in. A lot of those people end up just buying a stable turnkey multifamily property for themselves and hiring property management. And there's nothing wrong with that, but they don't realize that there's other options out there. So when we raise money, we really have to be cognizant and kind of reverse engineer who we're going to be raising the money from, and understanding that you can either cast a very wide net and really try to go for everybody, or you can niche down super well. And I think people that transition from other industries actually have a leg up in that regards, because they have a pool of people that they can get in front of and can instantly relate to them and have rapport and have conversations that I can't have, because if I sit down with a doctor or a surgeon, you know, I can't talk about my experience and my transition from the medical field into real estate and bridge that gap. It's just going to be a very different conversation. And I think having that experience and leveraging it is a incredibly smart thing that you're doing.
Yeah, I started researching a lot about marketing and kind of how to raise money and that sort of thing. And someone that I was working with really stressed that the biggest deterrent and factor in getting people to invest money with you is trust. They have to trust you before they do it. And I was told, okay, you need to be making YouTube videos, put them on your page so that people can see you talking. And after watching a 5-minute video, really feel like they got to know you through that, instead of like just listening to you on a podcast or literally just reading what you're writing on a website. It's so impersonal. But when you're making the videos and you're coming across in these things and people can see you, they're starting to build trust with you. And that's the biggest proponent for them getting to invest. And I realized that having that relatability to other medical professionals, like you said, I can talk other things besides real estate. It just naturally builds that trust in the relationship. And it gives me a little bit of leg up, as opposed to someone else coming in and trying to raise money and not having that medical background. Yes.
Mm-hmm. Yeah, I think the one thing I'll add to what you were saying is I've found that people get information or learn about somebody in many different ways. So I think YouTube is probably one of the best, if not the best. But I've also had plenty of people that have come to me and said, oh, I listened to your podcast and like we're doing an intro. And then now I have to almost ask the question like, hey, do you need me to tell my story or do you already know it, type of thing, which is kind of a weird thing. And I feel weird asking it, but I've already had people say like, oh, I feel like I kind of know you already because I listen to the podcast or I follow you on Instagram or, I've seen, all these different things. So the platform, I think YouTube, like I said, is probably one of the better ones, but there are people that prefer different mediums. And there are people that I know that just prefer reading blog posts. Like that's just what they love to do. And there's all that. But I think having that human element with the video, with the voice helps in that regard as well, because at some point, nobody's just going to read a blog post and invest $50,000. They're going to want to talk to you at some point. That video is it's like an echo of a conversation in a way where it's not a back and forth and they can't ask you specific questions, but a lot of things they may have asked or the feeling they're trying to get, they can already get from that video. And it's not as cold on that first call you're going to have someone or a Zoom call, whatever it is. So I think it definitely bridges that gap. But I think it's important to also understand where you as the person trying to raise money feel the most comfortable and confident and at ease, because there are people that are going to look for the messages and the education and the knowledge in that medium. And you don't have to like force it, right? If you hate being on video, still do some YouTube videos because I think it's important. But, if you love writing, quadruple down on blogs, because there's plenty of blogs that make a ton of money and raise a lot of money as well. So I think that's important.
100%. And I think kind of going off that is people, and it was kind of an intimidating part getting into this space is like, okay, I'm kind of new in it. If someone's out here looking for an operator to invest money in and possibly in a real estate deal, like, why are they going to choose me over someone else who has this amount of experience or they're doing these kind of deals? And I started learning. I mean, even when I listen to podcasts, like different personalities appeal to different people. And when you're looking at an operator to invest passively in, like, you really kind of start matching with people's personalities. And that's something that you can get a grip on through podcasts, YouTube videos, blogs. And it really sets you apart. And different people just appeal to different people. And that's kind of your unique individuality. So it can be intimidating even getting into the space and thinking about that. But you just got to realize that, I mean, if you're genuine in yourself and putting your information out there, you'll attract the right people that you want in your deals.
Mm-hmm. At the end of the day, people relate to people.
Yes.
So when you have that niche, as a nurse, you guys already have a common bond. And at the end of the day, you're right. The deal could be the best deal in the world. If they don't really trust you or know you or like you as an operator, you're not going to get their money 99% of the time. That's why I agree, what Chris said and what you did was, genius, because when you come out of a field, you can relate to everybody in that field. What you didn't know, they might or might not know. When you can bring that educational value to them, subliminally or not, you're breaking barriers of trust that they may not even know they even had, because you're all on the even playing field. So you could be doing a regular deal that, a broker marketed deal that everybody has seen, but at the end of the day, it doesn't matter, because they trust you, believe you, they know what you've accomplished as a nurse and what you've been able to do. So they're going to take that level of trust and relationship building and all that, and they're going to give you 100% of their confidence, because people relate to that. That's why, building that avatar is important. And I talk about time. We didn't do it. We sucked at it. And, I've had this conversation multiple times, say, who do we want to invest, right? Because we've gone from mom and pop to institutional, back down to mom and pop, because at the end of the day, you really got to know who you want, because you're gonna have such an easier time going after them when you can relate to everything that they've been through, and you're gonna have the same fears, right? You took the initiative, but your fear and not knowing if people in the real estate world would open up, well, all those fears that they're gonna have, so you can easily break them down easier. So it was super smart. And even when reading your website and watching a couple of your videos, impressive is an understatement, because you whether it's a year, 10 years, or 20 years in the business, that bond that you build is irreplaceable, regardless of the deal, regardless of everything else. So I think it's super smart, and something that everybody listening, should take to heart and do.
Yeah, thank you.
Yeah, I think that the one thing though to keep in mind, right, is because there are so many people who come over from something that don't have that industry, right? I'm not the lawyer who's raising money from lawyers. I'm not the doctor or nurse who's raising money from medical professionals. That playbook is fantastic in that it gets your foot in the door. But as you build that relationship, if they don't trust you, or they think you're a dick, or they just don't jive with your values or your business plan, just because you were in the same field doesn't mean they're going to invest with you. So it's not like this be all end all thing. It's not like, oh, I've got to go work as a doctor for 5 years to then transition over. It's just an easier way to get your foot in the door, build rapport, and build that trust. You've still got to then, actually earn their trust and show that, hey, what I'm putting down is something that is of interest to you and actually makes sense. So yeah, you may have to cast a slightly wider net. It may be harder to niche down if you don't have that ability or that capability, but it's just a little bit of an edge to get your foot in the door. 80, 90, 70% of the work is still the same regardless. It's just, you've already got a pipeline of people that can already come in. So I think it's important for anybody listening to understand that, like, hey, it's not like, just an automatic funnel of money flowing in. It's not like you just stepped in the door and people started throwing, bags of money at you. There's still a lot of work that has to be done from that initial introduction, that initial nice feeling, from them to go from, oh, you're a nurse that's doing real estate, that's interesting, to, hey, I really like what you're doing. Here's $100,000 in this deal.
Yeah, exactly.
Have you found anything as you've been raising money and looking at deals that you thought was either going to be very different and has changed, or something that you've found that has been extra helpful as you've kind of gone through this process, talking with investors, having those conversations, making them feel comfortable, and eventually writing a check?
A couple things. I think like I mentioned a couple of times, the imposter syndrome was really big for me, raising that capital and kind of wondering who you are in the space to be able to do that from people. That was a huge mindset shift that I had to get over before I started doing it. And there's a lot of different ways that you can get over doing that. I mean, really educating yourself, continuing to do good deals and proving good returns to your investors, that sort of stuff in terms of kind of getting into the space. With regards to kind of investor side of things, I think one of the things that I learned was the amount of effort that goes into marketing. I mean, I knew that it was going to take a lot of work, but there's a lot of relationship building, and that takes a lot of time and energy. And that was something that originally, when my husband and I started our real estate business, we were wanting to really just do the acquisition side of deals and hoping that we could kind of partner with someone else who was doing the capital raising side of things. And then as we were kind of moving forward in it, and really because we both work full-time jobs, we have 2 young daughters, we knew that marketing and kind of doing investor relationships was going to take a lot of work. And we were hoping we could leverage it from someone who was already doing it. But then as we were going through it, we realized that owning a real estate business, we had to do some sort of brand building. We couldn't be out there as operators of the deal, running these deals, having people invest with us without putting out some sort of content, kind of explaining who we were, what we were doing. And so that kind of it was kind of a time lapse of where we were trying to figure out what we needed to do with that respect. And then when we realized, we need to build a brand and build a platform, we did move pretty quickly on it, but there was kind of that hurdle at first we had to jump over.
Mm-hmm. I hear you. I think imposter syndrome's funny. I think it's something everybody deals with. I think the best way to get over imposter syndrome that I've found is look at somebody who you follow on social media or in the world or whatever. And I'm sure if you follow them, they're probably at a larger stage, right? They've either got hundreds of thousands or millions of followers, or they have this big audience, or they make tons of money, but they always started somewhere. And at some point, guaranteed, they had a first video or first interview or first photo, and I guarantee it was shit. And you can go back and find it and look at it, and you can see the difference in level from where they started and where they are today, and the vast difference. And the one that hit for me was at the time I was listening to a lot Joe Rogan's podcast when we first started doing this a few years ago, and he happened to put out a screenshot of his first ever podcast. And it was like the most pixelated image I've ever seen. I could barely make out him in the photo, and he had like these terrible graphic overlays over it. So I went on to YouTube and I went back and watched it, and it was the worst thing I've ever seen in my entire life. It was really not great, or at least the start of it. Honestly, I probably only watched like the first 5 or 10 minutes, but they didn't even realize they were recording for like the first 3 minutes. They had like this graphic overlay over it. I think it was of like snow or something, and it was just bad. But I was able to take a look at that and say, okay, if that's where he was 9-10 years ago, and now he's consistently top 5 podcasts, and now he just had like $100 million deal with Spotify, you know, all it is just consistency doing and, you know, not giving up basically. So I encourage people to go back, look at somebody who they follow, admire, want to be like, and see where they are at the start, because there's a long journey and process that got to where they are today. And too many people just see the finished product, the overnight success type thing, but there's been a long journey ahead of time. And it's much easier to relate to that first image of Joe Rogan than it is to relate to the Joe Rogan on the front of whatever magazine or whatever, just making $100 million off his podcast.
Yeah. I think that can be both a very scary thing and a very reassuring thing, that all it takes is consistency, because you're looking at something and you're like, oh my gosh, I got to keep putting in the effort. It can be intimidating and it can be scary. I mean, I'm a huge proponent of the book Grit. Like, that got me through a lot. I'm all about like consistency, perseverance, that sort of stuff. And it can be hard and heavy knowing that you got to keep taking action over and over and over, even especially in the beginning when you don't have a lot of traction, you don't have a lot of followers, you're not getting a lot of downloads on a podcast maybe, and then continuing to take that next step. But then the reassuring part is all you have to do is take that next step. Like, you just have to do the next thing. Like, maybe you're in a place where you're not getting a lot of likes or a lot of following or a good traction on what you're putting out, but if you know that all you have to do is do the next thing, then it's kind of like, okay, well then I can do that. I can put out another blog post. I can hop on another podcast episode and record another podcast episode. And when you kind of break it down into that, it doesn't seem as daunting.
The way I look at it, and I hear what you're saying, and I've never really thought of it that way. The way I've always thought of it is, if I'm going to look at it from 10 years in the future, as long as I'm consistently doing, if there's a lapse, it's not the end of the world, because I'm not trying to get $100 million tomorrow. I'm not trying to get $100 million in a year if the 100 million from Joe Rogan was the goal, right? If I'm looking at it from 10 years, if I don't, if I miss a day, it's one day out of 10 years. If I don't post for 2 months, okay, it's not great, but it's not the end of the world because I'm looking at such a larger time frame that in 10 years, I'm going to forget about the couple days I didn't post or my first early post that sucked, because those things are going to go away. So for me, it's actually really liberating in a way, because I can look at it and say, okay, if I mess up today, or I don't do something today, or today wasn't a good day, is it really going to matter 10 years from now, 5 years from now, whatever the goal is? So I've always viewed it as, that consistency is, okay, yeah, you've got to do it, but you're never going to do it 100% of the time for 10 years. So those days that you were at 0%, okay, as long as I'm hitting 70, 80, 90% over 10 years, maybe if I was 100%, I could have done it in 8 years, but I'd rather have some leeway and be able to, quote unquote, forgive myself for those days that I don't do it and hit it in 10 years. So I actually love that aspect, and I feel it's very liberating.
Mm-hmm. Yeah.
That, I think the biggest thing there is that, if you had a checklist every week and you won 75 to 85% of the week, you win, right? Mm-hmm. You don't want I didn't do it. Next thing you know, the wheels are off the bus and you're just not doing it, right? But if you can at least check in with yourself and monitor what you're doing, so you are, winning a majority of the time, and 75, 80%, you're going to be extremely productive. Because I would bet the average person out there has big visions and they get like 20, 30% of it completed because they're not continually checking in or being consistent. So yes, if you miss a day, the wheels aren't coming off the bus, but you can't, if you don't change the oil and then the wheel comes off the bus, at the end of the day, you're broken down on the side of the road and you're just never going to go anywhere. So I agree there that you gotta be consistent on winning. Win every week, but if you miss a day, you miss a day, right? That happens, right? If you're going on a diet, you can have a piece of cake, but you can't eat the whole cake every day. So you just want to make sure you're taking the necessary steps to get to the goal that you want to achieve, and then you're fine, right? Because you just got to be consistent, but you don't have to be perfect.
Yeah.
Yeah. If you want to hit 80% in 10 years, you can't spend the first 2 years doing literally nothing and then try to go 100% for the next 8. That'll never work. But yeah, you're 100%. You've got to, if you have a 10-year vision, you've got to break it down into smaller measurable things. And like you said, whether it's, weekly, monthly, bi-weekly, whatever it is, you have to look at that and just, check it off. Did good, didn't do good. Did I hit the mark for this time? But I think too many people go way too short and be like, okay, every day I've got to be 100%. Mm-hmm. It's tough to be, 80% of the day, whatever. So I think that's a really good way to break it down. Like, hey, look at the week. Did I hit 5 of 7 days? Did I hit 6 of 7 days? If yes, fantastic, good week, move on. And then even if you didn't, right, if you only get 3 or 4, like just understand, like, okay, then over the next 2 weeks, we aim for 6 of 7 instead of 5 of 7, right? It's, it's a give and take type thing. So I think having that long-term is good because it allows some flexibility in the short term. But like you said, you obviously can't just go off the deep end right away and hope to pick it up at the end, because that just doesn't work.
That's why I said done is better than perfect, right? Everybody, no one wants to send out their first investor book. Nobody wants to call that first broker because they want to have the whole script down, but done is better than perfect, because done will make you, those are the positive steps to get to where you want to go, as opposed to, wait, should I send this out or should I not? I look at my first investment book to now, and, when I sent it out, I was like, uh-oh. But, it progresses, you get better. The podcast analogy was perfect. So done is better than perfect, 100%. You just got to keep score.
100%. So changing gears a little bit, Savannah, what are you guys looking at with, obviously the past year or so with COVID? What have you guys been looking at going forward? Are you guys changing your business model or your business plan? Are you guys looking for different deals, different geographical locations, or it's still, hey, we think we picked good areas, good deals, and this was a blip and we're going to be fine for the long term?
Yeah, we look in a few different markets. So depending on the market, we've already always looked in diverse job growth markets, heavy population trends. We look in Atlanta, Georgia, Reno, Arizona. So we're looking in good markets where there still continues to be deal flow. Something that we're looking at right now is the delinquencies and kind of how to negotiate those deals. Our last syndication deal we did was in a working class town in Oregon. It's had zero delinquencies since the start of COVID, which is pretty amazing. And we've been riding out that one and still looking in the area to see if we can find deals similar. But even since over the last month, we've noticed there's a lot of delinquencies in the deals that we're looking at. And so we're just trying to figure out how we can get financing from a bank with that, how we can negotiate the deal to either wipe those terms clean and not have to owe the seller anything as we continue to close the deal and have to continue collecting rents. So we're really trying to strategize what the best way is to move forward with that. And we've realized as we're like asking our broker and property manager, what do you suggest we do with these type of things? Or what are you seeing done out there, that people are kind of like, well, it's a pandemic. So everyone's kind of rolling with the punches at this point. No one really knows exactly what to do. And my husband and I were talking about it last night, that this is the opportunity where you can be super creative with how you're taking down those deals. I mean, this is what people are talking about when they're saying like, oh, there's going to be so many good deals to come. And it's probably finding these buildings where the owner is just losing thousands of dollars because there's delinquencies in the building, and trying to figure out a creative, strategic way to put an offer on these deals and work with the property management company to either evict these tenants or give them cash for keys, or figure out a way. I mean, not right now. I mean, especially in Oregon where we're looking, there's a lot of things that the government's putting in place to kind of help tenants pay rent. And even they're putting something March 1st up in Oregon where they will give the landlord 80% of rents uncollected as a grant. And so they're pushing out something like that up in Oregon. And some of it, we're looking in that in Georgia too, but there's just a lot of opportunities out there, I think, this coming year. And I think a lot of people will have to be creative in how they're taking down the deal. So we're trying to kind of navigate that.
Mm-hmm. Gotcha. No, I think that's really good points. I think a lot of the strategy comes down to where you're invested and what you're doing. Because I know in Florida, haven't had as big of an issue. They're kind of processing evictions, which I'm sure is very similar to Georgia, whereas your deal in Oregon is probably very different with very different process and things up there. So I think that's why it's important to understand the areas you're investing in, the markets, all the laws behind it, not just the geographic and population trends that are going on in that area, really understanding the risk associated with if people aren't paying for whatever reason, what kind of your recourse is, things like that. If a certain industry gets impacted, how much of your tenant pool is going to get impacted by that industry. You mentioned job diversity. So I think all those things are very important. Having that diversity across your portfolio is super interesting. So I think it's a really good strategy. Have you guys through COVID been talking with your investors and trying to change their expectations for future deals? Or is this just something you see as, once kind of vaccines roll out and we get through it, it's not necessarily going to be anything that has a lasting impact?
I think that's a little hopeful, just to think that it won't have a lasting impact. I mean, just being in the healthcare industry and seeing how, right now in LA, it's like the hardest. It's like New York back in March, April right now. It's been insane. I mean, we've had freezer body trucks outside our hospital for the last month, just taking away, like they're completely maxed out and full. So thinking that, even though vaccines have rolled out, I think we have 80% of our hospital vaccinated right now, which is amazing. But it's still, I think, going to take a little bit to get fully recovered from this. And I don't think we're necessarily having those conversations with our investors on the front end and kind of saying what to expect, because we honestly don't really know what to expect. So we're just doing our due diligence and our underwriting to really make sure we're considering all factors. And like you mentioned, the legalities is really a huge focus for us right now, and understanding, okay, if tenants aren't paying rent, what are the eviction laws? Like, what are our options? What are the grants out there that could help us as a landlord? So we're just kind of doubling down on doing our research on that end of things, so that when we do present the opportunities to investors, we're like, and they have those questions, like, what happens if this happens? Most of the time we'll share some of that information before they even have the questions, like, okay, we've already done this research. If this happens, this is a potential in this market. This is this is what our opportunities are as a landlord and as an owner with this specific deal. So kind of just doing the front research, especially regarding the legalities, is kind of how we're maintaining that relationship with our investors.
Mm-hmm. So obviously you have probably a greater level of understanding and knowledge than most people with the pandemic, just being in that environment, being surrounded by it every day. Do you think you're looking at deals in the short term differently than other people because of that? Or do you think it's not as relevant to how you're looking at deals? Like, I don't know if you're looking in certain areas that you feel are doing a better job of battling it, or you think have better laws. Is there anything in that regard?
I think the mind-blowing thing about that is it is so different across the country of what states are doing and markets are doing in regards to COVID and how they're handling it. I mean, in California, we've been locked down for almost, I think, like 6 to 9 months. And I know over in Georgia, they've haven't really been locked down, or even in Florida, they're a little more lax on their guidelines like that. Not saying that's necessarily worse. I think some of the evidence that's coming out right now is saying that the lockdown wasn't necessarily beneficial to the people and the spread of the virus. So there's a lot of background information about that. So I don't necessarily feel one type of way or the other. I think people are kind of just doing the best with what they got at the time. But it definitely depends on the market. And honestly, I don't watch the news. So it's hard for me to even, when someone told me everything was open in Georgia and Florida, I'm like, oh, really? That seems so crazy being here in LA where everything's been shut down for forever, ever. But it is important to understand kind of that information when you are taking down a deal, because it's dependent on the jobs. We had in the Oregon deal where we're looking at in the town, casinos are huge and a lot of the people are delinquent. And when we were talking on our broker for that of deals that we're looking at, they were like, why are there so many delinquencies? And it's like, well, there's a huge casino in that town and a lot of people have been out of work because it's been shut down. So understanding different aspects of that when you're looking at deals is super, super important.
Mm-hmm. No, I think it's a really good point, because I think everybody to a certain degree gets put in their bubble a little bit from where they live or what they experience, myself included. Because even when I drove down to Florida 2.5 months ago, stopped at a little, and New York was very similar to California. I'm sure it was basically everybody's wearing a mask almost all the time.
Oh, yeah.
Wasn't quite shut down at the time, but quasi shut down at the time. And driving down, I stopped at this small gas station in a little town on the border of South Carolina and Georgia. And I was shot because I'd been driving 14 hours and walked in, and it took me 2 to 3 minutes to look around and realize that not a single person was wearing a mask besides myself, even the person behind the register. And again, right, wrong, and different doesn't matter, but it was such a big difference to me. And I was like, wow, that's really crazy. And I think that's one of the reasons why when I bought the 16 unit and wanted to leave, I wanted to also come down to Jacksonville, because I think there's a level of knowledge you get by being in the area. And that's why if you're going to be out of state, having that team and those resources is so important. And something we always did, I think, very well was building a team, having resources that can really help educate you on the market, keep you up to time on the ongoings, especially as there's been a pandemic, because things are changing rapidly, shifting rapidly, and you really got to be on top of what's going on, especially as the laws and regulations and things change, whether, do people have to pay rent or not have to pay rent? Can they be evicted? Can they not be evicted? Can you do cash for keys or not? All those things are very important when you're doing multifamily and or rental property. So having that team in place is super important, because things are very different across the country. You've experienced it. I've experienced it. I'm sure anybody doing anything out of state has experienced it as well.
Yeah.
But I think that's a really great place to wrap up. Savannah, thank you so much for coming on and sharing your story and your insights. If people want to learn more about you, get in touch with you, or follow you, where can they do all that stuff?
Yeah, the Net Worth Nurse. So you can find me under the Net Worth Nurse on all social media handles. That's Facebook, YouTube, LinkedIn, and Instagram. You can find me under the Net Worth Nurse. That's my website and also my email. And I love connecting with other investors. If you're even remotely interested in real estate or what I've been saying, please reach out to me. I would love to chat.
Awesome. Guys, definitely go hit her up, go follow her, go get educated. If you have any interest, go connect if you want to pick her brain or, try to go work with her. But thank you to everybody for listening to this episode of the podcast. If you're not already subscribed, it would mean the world to John and I if you would do so. And if you're not, or if you are, please send it to someone that would get a tremendous amount of value from this episode. Savannah, once again, thank you so much for coming on. This is fantastic.
Thank you. My pleasure.